Yeah, look, the reality of the situation, Jerome Powell has butted everyone up to say, hey, look, we could go more aggressive from here on out. So we need to be prepared for that happening. I pulled some evidence together, some analysis I've been doing throughout today, which I wanted to share with you all. And this is very interesting to me. What we have on the charts here is the interest rate decision, okay, what the interest rate is in the US. This is the futures, so we are priced a little bit higher than what we're currently sitting at because futures move a little bit. And then we also have the US core CPI, and we're going to have a look at how these correlate from these interest rates being hiked to the actual inflation being impacted by these interest rates. So the orange line on your chart based on the left-hand scale is the core CPI. Okay, so don't mistake that for normal CPI. That's core CPI. And then our index scale on the right is the futures market for what our US inflation rates are. As we move through, we can see we hiked interest rates first and foremost on the 31st of January 2022, or at least around there, okay? We hiked them around 31st of January 2022. We haven't really seen any meaningful impact in this core CPI till about September, October. We peaked in September, the end of September. We really saw the impact in October and November with this trend pushing down. That means if we went off the peak, to be generous, that is an 8-month gap between when we hiked interest rates to when we actually seen the impact of those interest rates do something. Okay, now that's not even including the rest of the interest rate hikes that we've done in accordance to that. That's an 8-month delay in what we've seen in hiking those interest rates, which means if we release these interest rates too soon or too preactively, or we have another spike in inflation, we have to think 8 months in advance to get this back down, which is why Jerome Powell and why the Fed are being so aggressive and being so strong in stumping this, which is I 100% agree with. I understand that, the things that get hard when we have to do this, but for an 8-month delay, I mean, imagine how much worse it could get if inflation peaks again from here. And we're sitting at 5% interest rates. Like, we could go way, way higher. And it was a good little correlation graph, which I wanted to show everyone at home. I want to get you guys, your brains thinking into why the Fed's making the decisions it's doing, why the US dollar is moving the way the US dollar is over the past couple of days. Okay, we've seen very promptly how quickly this has been absolutely slammed. You can see on the daily chart, Ruben, you're obviously still looking for a bit of bearishness in the US dollar. You're not changing your analysis based on this speech?
It depends the time frame, but again, looking at by the end of the year, I don't think and this what actually you shown just before in the fundamental analysis that you have made, I think it makes sense for me because Powell and the Fed have this 8 months, 8 months security. This is why actually they keep hiking interest rate. They want to have security that they want the market to recover. They want a better economy, and this is why they keep increasing interest rate in case the inflation continue to rise. And I think this is more big news than a bad news. I mean, they take their responsibility by doing that, and this is why I believe again that the market is still on a good shape on the beginning of 2023. And again, I'm expecting certain continuous trend that we have seen from the beginning of the year. And yeah, I think that makes sense what you explained. It's very interesting to show the gap of these 8 months, which means, okay, this is quite the security that take the Fed. And of course, if we follow your analysis, we're going to see probably inflation a little bit going down. I mean, this is the trend, I think, in inflation. We will see. I think the next numbers will be very important to understand the trend even better. And if we see inflation going down, we're going to see a slow, let's say the interest rate not going even more up, and probably staying at this point or even decreasing the interest rate to fill the gap between the inflation and interest rate that we have. So for me, it's a good news, and it's good that you show this chart because it makes a lot of sense for me. So thanks.